What is happening around the world? Everything is going towards its worst. High inflation, ever-degrading stocks, and crypto crashes are all coming at the same time, denoting a fear of an extreme level of recession. The United States seems to always be the first to be struck by bad news in business and other markets. Main Street and Wall Street are frequently at odds when it comes to the status of the economy. Prominent trends include a possible recession in 2022 and a rise in interest rates. In today's video, we are going to discuss exactly what is happening, why is a recession imminent in 2022, and most importantly, we will talk about a couple of helpful things to do for mitigating the drastic effects of high inflation, stock downs, and crypto tanking. Also, before moving forward, if you are new to the channel and haven't subscribed to it yet, remember to subscribe to the channel and hit the bell icon so you won't miss any future videos we upload. Without further ado, let's get back to the video. According to the majority of American experts, the United States will experience a recession this year. Last month, consumer prices in the United States unexpectedly increased by 8.6%. There has been no evidence that the Federal Reserve's two interest rate hikes over the previous few months have had an impact on inflation. Economists are increasingly persuaded that the economy will grind to a standstill and begin declining as a result of rising inflation and the Federal Reserve's plans to take even more forceful action. The Financial Times and the University of Chicago's Initiative on Global Markets polled 49 U.S. macroeconomic experts at the beginning of June and found that this is most likely to happen at the end of this year. Since the Russian invasion of Ukraine at the end of February, food and gas prices have risen sharply, contributing significantly to the overall increase in inflation. During the conflict in Ukraine, Russian President Vladimir Putin has not hesitated to exploit Ukraine's food and energy exports as a bargaining tool, which has resulted in increasing prices. In the United States, food prices have gone up by 10.1% and energy prices have gone up by 34.6% in the last year. This has caused the national average gas prices to go over $5 for the first time ever. But let's not fool ourselves. To the dismay of many Americans and Canadian officials, American President Joe Biden canceled the Keystone Pipeline the day he took office, which would have brought the supply of crude oil more easily to the United States for gasoline without relying as much on other countries. When supply goes up, prices come down. Other things, like problems with the supply chain that keep making prices go up for everything from groceries to cars, are also likely to affect inflation in the coming year. So, increased prices, not just for food or commodities, but also for living expenses, may consume a large portion of your cash flow over the next few months. While inflation is almost certainly hitting your bottom line in some way, it may be worth making some basic modifications to your budget and spending patterns to accommodate it in the coming months. Some forethought and self-awareness about your spending habits may help you identify opportunities to save. If you don't already have a budget, now is an excellent time to start. While people are concerned about a number of real-world practical challenges, the greatest way and the first step is to simply limit your expenditures. Regarding the stock market, don't freak out. Panic selling is often people's instinctive reaction when stocks fall and their portfolio values plummet. That is why it is critical to understand your risk tolerance and how price fluctuations will influence you ahead of time. You can also reduce market risk by diversifying your portfolio, which means holding a variety of investments, some of which have a low correlation with the stock market. Instead of panicking and locking in your losses by selling at the bottom of a major market downturn, develop a bear market strategy to safeguard your assets at such times. Be sure to take care of the 3 measures I'm going to talk about to avoid major losses when the stock market falls. First, understand your risk tolerance. Second, prepare for certain losses and make strategies to limit your losses. The third measure is to focus on the long term. So, in short, you can rearrange your stock investments into a more robust portfolio, which has fewer chances of going down instantly in the recession. In the last section of the video, let's talk about things to do when cryptocurrencies are crashing. The word that best describes cryptocurrency is volatility. While rumors, sentiment, and fundamental events are immediately integrated into this market, cryptocurrency prices surge and then appear to plummet almost as quickly. In just 4 days in early June, Bitcoin went from $30,500 to around $23,500, a drop of nearly 23%. At the same time, Ethereum fell more than 31%, and it appears that the entire crypto market has been falling this year. So, there are some things you should do in case the cryptocurrency price falls too much. First, you have to stay calm. Whether you decide to sell your cryptocurrencies or use a drop as an opportunity to buy more, you must remain calm. If you believe in it, think in terms of long-term opportunity. Or if you're up for a quick exchange, keep that in mind. In the first case, you can sell some of your holdings while keeping others in case the market rises again, giving you some return at the very least. In addition, assess the situation and get knowledge about the main cause of it. This will help you to predict the future somewhat, so you can act accordingly. After you've calmed down and assessed the situation and what it implies for the future, you'll want to decide how to proceed. You will have answers to these questions until then. Are the dangers actually opportunities disguised as risks? Are the hazards likely to remain or worsen? Is the scenario very complicated? No matter what path you choose, you'll need a plan of action that shows how you see the risks and opportunities of cryptocurrencies. Finally, some of the world's smartest investors wouldn't touch cryptocurrency and will strongly advise you against doing so. Charlie Munger, vice chairman of Berkshire Hathaway, said, "I appreciate the Chinese. I think they made the correct move, which was to simply ban them." To sum up the whole discussion, the recession forecasts are true and come from even Tesla CEO Elon Musk and JP Morgan Chase CEO Jamie Dimon, and they show the deep concern felt in the country's top offices as inflation hits its highest annual rate in almost 40 years. So, it's high time to make preparations for it before things get worse. Well, that is all for today's video. Feel free to share your concerns in the comment section below. And if you like this video, please give us the thumbs up. See you in the next video. Until then, best of luck and goodbye.